Okay, here's Aapl. I'll do a quick review of Friday, May 26th. Did not take the position that I had mapped out, which essentially was a break above this wedge. I just didn't like the volume that was coming into Aapl or the S&P 500, so nothing was taken as far as new positions. Did add into a position with the option players in some June 9th 155 calls, and we'll be looking forward to those coming up with price. Now, even though this does look like a bit of a head and shoulders pattern here on the hourly chart, it's already broken down and at least implied that there's no strength below here for sellers to maintain a position below 152. A couple things that I want to point out before I get into too much of the analysis here. On the weekly time frame, Aapl has put in an inside candle, which all that means is that the price action from last week is completely contained within the previous week's price action. That also means that there was no direction. So it's a very indecisive move. There were potentially no new positions opened, and anyone who is in this trade, either shorts or longs, are now trapped. So whichever way this breaks is probably going to trigger some stop losses, and in my opinion, the bigger move would be if it breaks to the upside. Bears may be speculating that this is a top and be shorting versus all-time high, but there's nothing else up there to trade against. Longs, any kind of bulls that are in the trade, have plenty of supports to choose from, and it's not necessarily it's not a necessity that they would have to close out, because you have plenty of supports to choose from if you're willing to stomach some of that pain in a pullback. Now, going forward, these stops that will be up here and below here will probably be visible to the market makers, and they're probably going to be hunting for them. Now, on the intraday time frame, what I want to draw on here is a couple of interesting points of reference. First of all is this trend line. This trend line, just like all trend lines, is user generated, so anyone using this trend line, they drew themselves. Computers don't necessarily see these and may not have as many participants as a trader would really like to see to create any kind of opportunities. They are good guidelines, but not the strongest in my opinion. Just basically, like I said, a guideline. Now, what I'll be looking for going forward is actually break above this trend line, so I will go ahead and put my first play on here of long over 153. I think it's about 83, and I'll put my stop actually just below this breakout level. I have to go down a lower time frame to illustrate that level. We had basically a false breakdown on Friday into the close, so I want to see price action hold above there to prove that is a false breakdown. It's about 40 cents, so just less than 1/2 the delta on some option calls. Oops. I want to move this back so I can see it. Alright, now what also is standing out to me on this hourly chart is, since this gap up here, it put in what looked like it should have been a strong support, and it broke on Wednesday with that huge sell-off. They had zero follow-through, and because that move had zero follow-through, there may still be some bears in the trade, hoping and wishing and wanting the price to roll back over, and they may be short versus all-time high, which also leads me to believe that there's going to be short covering, which may push the price up quite a bit higher. Now, with that said, in relation to this level, we've got several higher lows, 1, 2, and a double bottom basically, and now a couple, actually one higher high, which did pierce above this, which means this level here of 154.65 is not as strong as it potentially could have been. With that said, and going forward, I don't see any reason this would reject price very strongly. Do expect a considerable move higher. Next level is down here for support. I'm going to go ahead and draw on here. This level from Friday actually also corresponds to the 8-period exponential moving average 153.40. Next level down here would have to be these lows of 152.5 for support, and then ultimately the 21-period simple moving average, which is 151.5. So like I said, there are plenty of supports down below price for bulls to be trading against. Above, not so much for the bears. So this chart is still extremely bullish, and I'm not going to change that stance until I at least see a lower high or even a lower low. This will be my trade plan going forward into Tuesday, and we'll see what happens on the open.